Hey everybody, this is Robert with the Money Coach Show. Thank you for joining me. Today I'm writing solo, but that's no big deal because you know what? I'm still your cheat sheet to mortgage understanding. And today it's a pretty big episode, and you know what? It's no dig on my colleagues here, but you know what? I have so much information that again I've always spoken about it. Hey, you're gonna talk to me. You can get tons of information whether you want it or not. And you know what? If you're joining this call, that means you want this information. So, you know what? I'm going to go over the past 40 years of rate history. I'm going to go and show you a chart that's going to be the average on the high. But before I go ahead and show you that information, what I want to do is quick little market update as we do every week. As I do have a great chart to show you real quick. Let me just go ahead and pull that up. We can see that for the last month, rates have been stagnant. They've been creeping up a little bit, as of yesterday. This was the average closing. If I hover over it, you can see it was basically, for a conforming 30-year loan, it was 6.876 was the average. And for an FHA, slightly lower at 6.547%. And within the past 30 minutes or so, when I checked rates, the average closing was at the low sevens. So we want to make sure that we have a good understanding because again, I have a great show for you because as I've mentioned before that we as society, we have short-term memory loss. Remember the great times and they always seem like they weren't so far away when in actuality they kind of were. And sometimes there was bad times that we think were, hey, that was yesterday, but in reality it was, quite a few, weeks ago, months ago, even possibly years ago. With that being said, I'm still sharing my screen here. This is a chart that I'll create for anyone who has mortgage questions to be able to pull up numbers for them based on the information I'm able to gather from you. So with this right here, though, I have the past 40 years within a decade. Basically, what was the average highest interest rate per decade? And we started at the 90s. Look at that interest rate there. As you can see, I'm going to basically unhighlight everything and highlight the 90s. That's a 9.97% interest rate on the average purchase price of a home was $150,000. That's pretty huge if you ask me. Now, we're going to go over here to the early 2000s. It was 8%. That's still pretty high, considering what we're thought of today. And you know what? Look at the average price of the home. It actually went down. So, you know what? And then now let's go ahead and look over here at the, you know, 2010 and 2019. Between there, the average interest rate was a 4.86%. Now, again, say if you bought when this is kind of that time is now, early 2000s, hey, you're buying where it's relatively what considered high. But yeah, the cost of the home is a little bit more, but if you can afford the home, we say get in it. Don't wait for rates to drop because you know what? If you do wait, look at this. Yeah, you're waiting for that interest rate to go to 4%. But look at that. $275,000 was the average cost of a home in America. And you know what? That's huge. Look at that. That's $155,000 of equity if you would have bought in the early 2000s. $155,000 of just pure equity of the appreciation going up. I don't know if that's echoing with you right now, but that is huge. You know what? Then say if you did buy with that amazing equity buildup and you have this high interest rate, then you refinanced when the interest rates got a little bit lower. Because again, they fluctuate. We see it all the time. We hear about it all the time. We have so much history and data to tell you this is what it does. It fluctuates. Now, again, we're in that, oh no, it's high interest rate, category, but at the same time, you're going to build equity. It's like as we look at the scale here, $150,000 for the average home, up to $425,000 for the average home. I'm going to create quite a few videos within our shorts catalog that will basically give you great breakdowns with all the information that I looked up to even gather this information right here, that will break down why now still always a good time to buy a home. Hey, in the 90s, now was a good time to buy a home if you can afford it. So it doesn't matter. Early 2000s, mid 2000s, 2025. If you can afford it, now is the time to buy a home because you know what? Building that equity that equity line is huge. Sure, we saw it depreciate a little bit here, but you know what? If you bought it at $150,000 and then squirmed when it depreciated and got rid of it instead of held onto it and reached out to a mortgage advisor like one of us here at Loan and Key, we would have been able to help you understand, hey, this happens. Hold on to it, depending on what your situations are, you know, and look at the benefit that you can be afforded. It has so many pros to cons when it comes to affording the home now and purchasing it as opposed to waiting for that interest rate to drop. Because again, we can see that interest rate drop, and it will be a scary thing when they drop from 8% to 4.8%. But that cost of the home, $120,000 to $275,000 in just that 10-year time frame, that could be what's happening next. I don't want to be, a forecaster in that, but we have seen consistently the cost of the home does go up. The interest rate fluctuates and can come down. So reach out to us here at Loan and Key so we can make sure you have all the tools necessary to make that educated decision when it comes to purchasing a home or refinancing a home. Because the one thing we want to make sure is that you walk away feeling confident once you've signed any document that says, hey, I'm a new homeowner, or hey, I've refinanced with the guys or gals that will actually look out for me. Because that's what we want to do here at Loan and Key, because we have a Hippocratic oath within our monks ourselves to make sure that we look out for you. A brilliant mentor of mine one time said, if you worry about someone else's pocketbook and saving them money, you'll never have to worry about filling up your own. And that is true. So with that being said, I'm going to go ahead and leave this episode and wrap it up because, again, I hope all of you guys got value out of it. Much needed information, and look out for those videos coming up because they're going to be fast and furious, and honestly, information I truly think everyone needs to know. Until then, I hope all of you have a wonderful rest of your day. Take care.